Hello everybody, welcome back to my channel, and today we are going to be studying about the first basic chapter of income tax law in the CA intermediate syllabus. So that is the basic concepts, and that is the first chapter that we are going to study about. So here is some of the learning outcomes given here, and apart from it, a chapter starts from basic analyzation of the chapter, and which starts like the basic concepts, and there are given some components of income tax law, that is the Income Tax Act 1961, Annual Finance Act, income tax rules, circulars and notifications, legal decisions, and some of the steps for computation of total income and tax liability. All these things that we are going to be studying about, the pointers that are given here, then the important definitions that are given here, all we have to study, and at the last we have to study about the basis of charge and the rates of taxes, that is the charge of income tax and the rates of income tax. Introduction. So basically this chapter is the basic analysis of what is the income tax is all about. So that is just the basic, like you will going to be knowing about all the theoretical basis to form your opinion about what you are going to study in this whole subject. So that is totally about the basic, and you need to actually grasp the knowledge that is given here in order to understand the rest of the chapters. This is very crucial for you to actually understand it in the right manner and in the right meaning. Now it starts with the introduction. What is tax? Let us begin by understanding the meaning of tax. Taxes are considered to be the cost of living in a society. So basically, tax, the general meaning of tax comes by when you are living somewhere or when you are purchasing anything in your daily life, in your ordinary life, you are paying for it. So in the broader manner, on the macro level, when you are living in a country, when you are paying something in order to you are reverting your country for living in that and utilizing it all its sources, so that is known as the cost of living in a society. So taxes are levied by the governments to meet the common welfare expenditure of the society. There are two types of taxes, direct taxes and indirect taxes. So basically it is levied by the government, and it is basically charged on you so that the welfare of whatever the people who are living, who are paying the taxes, or not, or whatever the thing, whatever the scene is, their expenditure, and that expenditure can be utilized to increase their welfare, to increase their standard of living in the society. So there are two types of taxes, the direct taxes and the indirect taxes. So direct taxes is basically they are directly levied on the income or wealth of a person. So basically, if I say an A person is earning some type of income, for example, 6 lakh rupees in a year, and so he has to pay rupees 32,500 as income tax directly on the income that he is earning. No calculations, no subtractions, only on the income that he is directly earning, the direct tax is levied, and it has to be paid to the government, and it cannot recover it from somebody else. That means on your income, nobody else can pay the tax for you. So basically, the burden of direct tax is borne to the person for whom income it is earning. Okay, it cannot be shifted. So that is the income tax basically. So income tax that we are studying right now is a direct tax. Now the indirect taxes are basically the taxes that are levied on the price of a good or service. So basically, if we say for example, if another B person is buying something, like suppose he buys a movie ticket, and that means he is receiving some entertainment service, so he's paying tax on it. Like for example, the price of the movie ticket is rupees 100, and he's paying rupees 60 for actual entertainment service, and rupees 40 as a tax. In his bill receipt it is showing like that. So that 40 rupees is his indirect taxes that he's paying for receiving those entertainment services. So that is basically in the form of the goods and services tax, which we are going to study in the module next subject. So our custom duty, which are still levying as an indirect taxes in India. So the person paying the taxes is passing the incidence of tax on another person. So basically we can say that the government levied the tax of entertainment basically on all the providers of entertainment service. But it is possible to shift the burden of the indirect, whatever the tax that is levied on the entertainment service providers, they can recover all their tax cost from the consumers, from all the demanders that are receiving their service. So basically the indirect taxes are able to be recovered, and their incidence can be passed from one person to another. So basically the types of taxes are direct taxes and indirect taxes. Direct taxes are income tax or tax on undisclosed foreign income and assets, and indirect taxes come by goods and services tax or customs duty. Now why are taxes levied? So basically the major reason for why the taxes are levied is that they continue to be the basic source of revenue to the government. So revenue so raised is utilized for meeting the expenses of government like defense, provision of education, healthcare, infrastructure facilities like roads, dams, etc. So basically whatever we talked about here, the common welfare expenditure on society, that is only the main reason why government is levying taxes on the society, to actually meet the expenses of the society. So now we are going to study about the power to levy taxes. So basically the Constitution of India in Article 265 lays down that no tax shall be levied or collected except by authority of law. So what you understand by this, that there is some law regarding the levying and collection of tax, and those on whom this law is levied, they are doing their service of levying and collection of taxes, and then the incidence is falling on the persons who are living in the country to pay the tax. So basically it is not like that government is like irrationally asking us to pay any tax. There is law in our constitution that gives them the power to collect the taxes from us and levy on it. So basically Constitution of India gives the power to levy and collect taxes, whether direct or indirect, both of them, to the central and state government. So basically the central and state governments have the power to levy and collect the taxes. So basically we need to understand a very important thing here. Next thing is, the Parliament and state legislatures are empowered to make laws on the matters enumerated in the 7th schedule by virtue of Article 246 of the Constitution of India. So basically, the Parliament is the one that is making the laws, and the state legislature is making the laws on the state level, Parliament on the bigger country level, on the central level. Basically the Parliament is making laws, and the central government, the government is the executive. Okay, we studied about the three organizations, three pillars of a country: judiciary, parliament, and executive. So it is saying that who has the power to make the law? So the Parliament and the state legislatures are empowered to make laws on the matters enumerated in the 7th schedule by virtue of Article 246. So basically, what is 7th schedule to Article 246? In our constitution, there is some Article 246, and in that 7th schedule, there are three lists which enumerates the matters under which the Parliament can make laws and under which the state legislatures can make laws. So these authorities have their different matters on which they can make laws, so there is no clash between them. Okay, so first list is the Union list. Parliament has the exclusive power to make laws on the matters contained in Union list. Now, what does the word exclusive power means here? Exclusive power means there would not be interference of any other authority in making laws on whatever the matters that are listed in the Union list. So only the Parliament has the sole responsibility, sole authority to make the laws on that matters that are enumerated in the Union list. Now, the state list. Legislatures of any state has the exclusive power to make laws on the matters contained in the state list. Concurrent list. Both Parliament and state legislatures have the power to make laws on the matters contained in the concurrent list. Okay, that must be very clear. The next two lists: Union list, state list, concurrent list. Now, very important point. Now, where is the income tax comes under these three lists? So basically, the laws on the income tax, they are basically coming under the entry number 82 of the Union list. If we are studying the word Union list, that means the Parliament has the sole responsibility, sole authority to make the laws on that matter, and it can give now the Parliament has given the power to the Parliament to make laws on taxes on income other than agricultural income. So whatever the income tax, whatever the incomes are coming under the income tax apart from agricultural income, Parliament can make laws on any kind of income under the Union list. Now comes the overview of income tax law in India. Now, we are going to study about what makes the income tax law together in India. What are the components? What are the things that are coming under it? Now, components of income tax law: Income Tax Act, Annual Finance Act, income tax rules, circulars and notifications, legal decisions of courts. Now, first is the Income Tax Act 1961. The levy of income tax in India is governed by the Income Tax Act 1961. In this book, we shall briefly revert to this as an act. It extends to the whole of India. It came into force on 1st April 1962. It contains sections 1 to 298 and schedules 1 to 14. So basically, Income Tax Act 1961 is governing all the, it has all of the things like related to the income tax. If you want to study anything about the income tax, you will straightly go into the Income Tax Act 1961. It has everything that you want to know about the income tax, all the rules and everything that we're going to study about next. So the features of it is that it extends to whole of India. It came into force on 1st April 1962, and it contains various sections 1 to 298 and schedules 1 to 14. So basically, it has sections, subsections, clauses, and subclauses. Now, what are these? So basically, whatever the things that are like covered under the Income Tax Act, they are divided into various sections. It has many chapters. It has then at the end has various schedules to it. Now, it has also various rules to it. Okay, so these are the different terms that we really want to study about. Now, when each part of the section is independent of each other and one is not related with other, such parts are called a clause. So basically, whatever a topic is being chosen under the Income Tax Act, suppose the levy of income tax on certain kind of profession. So that section will be like enumerating all the laws that are applicable for the levy and collection of law on that profession. Plus, if there are any subpoints that have to be included in that section, they will be divided into the subsections which are clearly independent of each other. If more subpoints are needed, the clauses will be made. If more subpoints are needed, the subclauses will be made. And every point is like independent of each other. Like every subsection is independent of another subsection. But whatever comes under that subsection, like clauses or subclauses, they would be related. Okay, I think you are like getting my point. So here, the subsection on the other hand refers to the such parts of a section where each part is related with other, and all subsections taken together completes the concept propounded in that section. Now, here is given some example of how to understand the section and subclauses. So you can take the example number 2. Likewise, the clauses of section 10 contain the exemptions in respect of certain income. Like clause 1 provides for exemption of agricultural income, and clause 2 provides for exemption of share income, and of clause 2 provides for exemption of share income of a member of a Hindu undivided family, and so on. So now we are going to study about the provisos and explanations. A section may also have provisos and explanations. So basically, what does the proviso means? A proviso to a section, subsection clause spells out the exceptions, conditions to the provision contained in the respective section, subsection clause. That is, the proviso spells out the cases where the provisions contained in the respective section, subsection clause would not apply, or where the provision would apply with certain modification. So basically, you can take it as a thing like if whatever the section, subsection, or a clause or a subclause is saying about a respective law relating to certain thing, suppose it is in that circle, and whatever the thing that is lying outside the circle, that is the proviso to that section, subsection, clause, or subclause. So basically, whatever the modification or whatever the exception that is to that particular thing that is written in the section, subsection, clause, or subclause, that is explained by the proviso. Now, what is the explanation? The explanation to a section, subsection clause gives a clarification relating to the provision contained in the respective section, subsection clause. So basically, the clarification, an internal aid to construction when it comes to the proper interpretation of whatever the thing that is written in the law, because interpretation of laws can be very tricky, and to get the right meaning in the right manner in the right amount of time, you need the explanation, whatever that is given by the lawmaker under that section, subsection, clause, or subclause. So that is what the explanation is. That is, they are the clarifications. So you can take an example. The proviso to sections 80GGB and 80GGC provide that no deductions shall be allowed under those sections in respect of any sum contributed by cash to political parties or an electoral trust. Now, the explanation below section 80 for the explanation below section 80GGC. Now, the example for explanation below. Now, section 80GGC provides that for the purposes of section 80GGB and 80GGC, political party means a political party registered under section 29A of the Representation of the People Act 1951. So now we are going to study about the Income Tax Act that undergoes change every year with additions and changes brought in by the Annual Finance Act passed by Parliament. So basically, there happens many kind of amendments in legislative amendments in the Income Tax Act 1961 that are brought by the Parliament, that is the lawmaker of the act. So why it is needed? Because with the passage of time, there comes like various kind of changes happens in the economy, various other factors that affect. So to update the Income Tax Act with the time concurrent to it, like to bring them in like simultaneously, to bring them in confirmation, the changes happen in the acts which are brought in by the Parliament. Okay, so these are basically brought in as the Short Amendments Act. These are called like the Taxation Laws Amendment Act in 2019 in respect of whenever it represents the year for whenever the amendments that are brought for the act. Now, next part. Now, what is the Finance Act? Every year, the Finance Minister of the Government of India introduces the finance bill in the Parliament's budget session. When the finance bill is passed by both the houses of Parliament and gets the assent of the President, it becomes the Finance Act. Amendments are made every year to the Income Tax Act 1961 and other tax laws by the Finance Act. So basically, the Finance Act is basically the budget session finance bill that is announced by the Finance Minister of the Government of India, and it lays down by like various factors, like there are things that are given in this Finance Act relating to the income tax laws. So it has part 1, part 2, part 3, and part 4, and it has their respective meanings. So when the finance bill, before its like proper announcement in the budget session, it is passed by both the houses of the Parliament, that means the lawmaker, so that it can get the assent of the President and it becomes the Finance Act. So amendments that are made every year to the Income Tax Act 1961 and other tax laws are given by the Finance Act in the form of the Finance Act. Now, the first schedule to the Finance Act contains 4 parts which specify the rates of tax. Now, the first schedule, we are only talking about the first schedule of the Finance Act, which has its 4 parts, that is the part 1, part 2, part 3, and part 4. Part 1 lays down the first schedule. The Finance Act specifies the rates of tax applicable to the current assessment year. So basically, the current assessment year, whatever the tax rates that are applicable on the income of the people, they are given in the part 1. So basically, what do you mean by the current assessment year? If the Finance Act is laying down, like, for example, 5% income tax slab rate, so that would be for assessment year 2020-21. That means in the assessment year 2020-21, but for previous year's income of 2019-2020. So part 2 specify the rates at which tax is deductible at source for the current financial year. Now, TDS, you must be all aware about TDS, tax deductible at source. So for the current financial year, for example, for the current financial year, that means if 2020-21 is the year, so for that year only, whatever the TDS rates will be applicable for that year. Part 3 gives the rates for calculating income tax for deducting tax from income chargeable under the head salaries and computation of advance tax. So whatever the income tax calculation for the rates like come under the deducting tax from income chargeable under the head salaries and computation of advance tax. So for under the head like salaries and advance tax, whatever the income tax will be rates will be applicable for them, they are given in the part 3. And the part 4 gives the rules for computing net agricultural income. Rules, that means they are the extra kind of notifications that are like published for the income tax, which we are going to study the next. So they are given for computing the net agricultural income, like the taxes on that income. Now we are going to study about the Income Tax Rules 1962. The administration of direct taxes is looked after by the Central Board of Direct Taxes, that is the CBDT. So that is the administration body of direct taxes which looks after the proper applicability of these tax laws and their formation. So CBDT is empowered to make rules for carrying out the purposes of the Act. To make sure that the purpose of the Act is fulfilled at every point of time, they make rules from time to time in the form of notifications. Now for the proper administration of the Income Tax Act 1961, the CBDT frames rules from time to time. These rules are collectively called Income Tax Rules 1962, collectively, okay? So the rules also have sub-rules, provisos and explanations. The proviso to a rule, sub-rule spells out the exception to the limits, conditions, guidelines, basis of valuation as the case may be, spelled out in the rule, sub-rule. The explanation gives clarification for the purposes of the rule. So basically, rules and sub-rules, they are basically similarly like the subsections and subsections, but they are different. They also have their provisos and explanations in the same meaning where they were carrying in the section and subsection. So basically these are the notifications that gives out the certain like kind of a new thing that are applicable, you know, like for example for some part of year, for like previous year they were saying like this part of income is under exemption, but now through the help of rule, the CBDT, the government administration body, it can like with the help of the rules it can give that the certain part of income is under exemption and certain part is not, or the fully part is just not under exemption anymore. So that kind of amendments can be brought in by the CBDT with the help of Income Tax Rules 1962. So it is important to keep in mind that along with Income Tax Act 1961, these rules should also be studied because they help us keep our knowledge of the income tax law in like proper updated form. Okay, so now we are going to study about the circulars and notifications. So the circulars and notifications are issued by the CBDT from time to time to deal with a certain specific problems and to clarify doubts regarding the scope and meaning of certain provisions of the Act. So in the same manner, circulars and notifications, as you can see, rules are more like in the form of law. Okay, circulars and notifications are more in the form of like prompt change, you know, like now the circular is being issued, now the notification has been issued that this has been like coming into force from now. This would be like the change in the income tax law in under certain part. Okay, so basically the circulars are issued by the CBDT from time to time to deal with certain specific problems, you know, like minute or even bigger problems to regarding the scope and meaning of certain provisions of the Act. Circulars are issued for the guidance of the officers and for SSCs. You should be very clear in understanding here that who are the officers. Okay, like there are many officers that are working under the CBDT, up on the CBDT, and there are SSCs. SSCs means the people on whom the income tax law is applicable. They are the SSCs. So basically for their guidance, for the proper meaning of the income tax law, the circulars and notifications are issued for them. The department is bound by the circulars. While such circulars are not binding on the SSC, they can take advantage of beneficial circulars. So basically the department is bound by the circulars. That means the circulars are basically the more like in the form of rule that has to be followed by them. But SSCs, they have like whatever they think that this circular is bringing any beneficial to them in the form of income tax act or the tax that is being levied on their income or any kind of exemption or any kind of deduction they are able to get from this year. So they take advantage of those beneficial circulars. Now the notifications are issued by the central government. You should notice that circulars are issued by the CBDT and the notifications are issued by the central government to give effect to the provisions to the Act. The CBDT is also empowered to make and amend rules for the purposes of the Act by issue of notifications which are binding on both department and SSCs. So the similar meaning, but a little bit difference for the notifications. Now the case laws refer to decisions given by courts. So, you know, like for the certain meaning, there has been clash between the two parties and they go to the Supreme Court or the High Court under the final decision for whatever is right and whatever is wrong. So whenever the Supreme Court, like it is the apex court of the country, and whatever that is like being the decision of the Supreme Court, that is the law of the land. So basically whatever their decision comes under that particular problem, that is being carried out for like a long time to understand the meaning of similar problems if they arise in the near future. So that means whenever the similar issue arises for on the same topic of clash, they can be like interpreted as the kind of law that has been given. Okay, I mean, it is not as law, but whenever the decision to certain dispute has been given, it is considered as like the final answer or the final interpretation to that kind of problem in the near future, which can be like interpreted in its own sense when it has been given then. So now, levy of income tax. Income tax is a tax levied on the total income of the previous year of every person. So basically, there is a person, and the person includes an individual, Hindu undivided family, association of persons, body of individuals, a firm, or a company. So the person includes is a very big definition. It is not a single, we're not talking about people, we're not talking about single individual, we are talking about persons, and the persons include individual, HUF, association of persons, BOI, a firm, or a company. So income tax is levied on the income of the previous year of every person. So the persons, for example, right now it is 2022. This is the assessment year in which we will be calculating the income tax on the total income of that person. But the income for the year of the income of 2021-22. So this is the total income and tax payable. So income tax is levied on an SSE's total income. Such total income has to be computed as per the provisions contained in the Income Tax Act 1961. So basically, income tax is levied on the total income. So we have to compute what is the total income, because the total income that is given or like computed by the what the person, or that is contained in Income Tax Act 1961, whatever the provisions have been given, like this income will be added or this income will not be added, because for the person it is allowed, like an individual is allowed to like disclose their own income, but for like a big company or a firm, their accounting income is not considered as the income under the income tax law, because it has to be computed according to the laws or the provisions that have been given under the Income Tax Law 1961. So the first step that comes under the total income and tax payable determination, it is the determination of residential status. Residential status, that means wherever the person that we are calculating the total income and the tax payable on, where they are resident to. So the residential status of a person has to be determined to ascertain which income is to be included in computing the total income. So basically, as you can see here, it is divided as the resident, deemed resident, and non-resident. So the resident and the deemed resident has two parts. So the resident and ordinarily resident, and second, it is a resident but not ordinarily resident, which is the deemed resident basically. So in the case of an individual, the duration for which he is present in India determines his residential status. So basically, we calculate a person's stay in India, the number of days he is staying in the country, and on that basis, we are calculating if he is a resident or a deemed resident or a non-resident. So based on the time spent by him, he may be a resident, ordinary resident, or RNR, okay, or NR. So residential status of a person determines the taxability of the income. For example, income earned and received outside India will not be taxable in the hands of a non-resident, but will be taxable in case of a resident and honorary resident. The concept of deemed resident is introduced by the Finance Act 2020, but it has been discussed in the upcoming charter. So we will be discussing it there. So classification of income under different heads. So there is a total income, and to calculate income in a proper way, the total income has been divided into various heads of income on the basis of which we are calculating a person's income. So the person may earn income from different sources. For example, a salaried person earns income by way of salaries, also gets returns from bank, savings account, fixed deposit. Apart from this, he has invested his shares, he would be getting dividend, and when he sells these shares, he may earn profit on such sale. So if he owns a residential property which he has let out, he would earn a rental income. So they are telling just a small individual who is a salaried person, and his computation of wherever the sources he is earning his income from. So there are so many sources here. So on the basis of this, we are classifying his income into various heads. So basically, under the income tax head, for the computation of total income, there are 5 different heads of income. So it is salaries, income from house property, profits and gains from business or profession, capital gains, and income from other sources. So there is a charging section under each head of income which defines the scope of income chargeable under that head. So basically, there's a charging section. That means when this section tells that if this thing is triggered in any income, that means this income will be charged under this head. So that is the meaning of the charging section. So these heads of income exhaust all possible types of income that can accrue to or to be received by the taxpayer. Accordingly, income earned is classified as below. Salary, pension earned is taxable under the head salaries. Rental income is taxable under the head income from house property. These are just some of the examples they are giving you to make your a basic understanding of what these heads means. Now, profits from sale of capital asset like land is taxable under the head capital gains. The 5th head of income is the residuary head income, which is chargeable to tax but not taxable under the first 4 heads, will be taxed under the head income from other sources. The taxpayer has to classify the income under the relevant head of income. So that is for the classification of heads. So now we have the computation of income under each head. So income is to be computed in accordance with the provisions governing a particular head of income. So under each head of income tax law, there are certain exemptions and certain deductions given to calculate proper income under that head. Now, step 4 comes clubbing of income of spouse, minor child, etc. So when you are done a bit calculating the total income of a person under various heads, you club the income, all the income under which is coming under all the heads, you club them, okay, join them. In case of individuals, income tax is levied on a slab system on the total income, so that becomes the total income. That means after clubbing, so according to the rates that are described by the income tax law, the rates are levied and the total income, the total tax that has been computed on that total income. So in order to prevent The tax avoidance clubbing provisions have been incorporated in the act, under which income arising to certain persons like spouse, minor child have to be included in the income of the person who has divided his income for the purpose of computing tax liability. So clubbing of income, you have calculated the person who is the earning member of the family has been calculating that total income you have calculated, but to avoid the tax avoidance, like whatever tactics the people use, so the income of the spouse and the minor child, the other members of the family, their income is also being included under that person's total income. Now, the setup for carry forward and setup of losses. An SSE may have different sources of income under the same head of income. He may have profit from the one source and loss from the other. So that is the basic understanding of the setup. If we have a under the same head, or like there have been provisions given in the income tax law of under which head of income or what loss of what head can be like set off against which other, and what losses can be carried forward and what cannot be. So this is the total thing that is given here, and all the thing that like similarly how they can be set off and carry forward. So it is all given in the upcoming chapters. Step 6 is the computation of gross total income. On the basis of that, the final figures of income or loss under each head of income, after allowing the deductions, allowances, and other adjustments, are then aggregated after giving effect to the provisions for clubbing of income and set off and carry forward of losses to arrive at the gross total income. So it is still a gross total income because we have to still arrive at some of the deductions or the exemptions that have been given by the income tax law. So there are deductions prescribed from gross total income. So these deductions are of three types basically. So deductions in respect of certain payments, deductions in respect of certain incomes, deductions in respect of other income, and other deductions that have been employed. And there have been like many full chapter regarding the deductions that are like applicable for a certain period of time. So that is the total income that we arrive at after like deducting our deductions from gross total income. So that is the proper chart that we have studied on all these steps. So the first one was the determination of residential status, then classifying it, then clubbing it, then set off. Then we have come at the gross total income, then deducting, and we have come at our total income. So application of the rates of tax on the total income. Now we come under like computed the total income, and now we have to calculate the tax on the total income. So basically there are some slab rates that have been given in the income tax law to compute the total income, and it is basically for individuals, HUF, etc. There is a slab rate and basic exemption limit. At present, the basic exemption limit is 2,50,000 for individuals. This means that no tax is payable by individuals with total income of up to 2,50,000. Those individuals whose total income is more than 2,50,000 but less than rupees 5 lakh have to pay tax on the total income in excess of 2,50,000 at the rate 5%. However, they have been allowed a slab enjoy rebate of lower of 12,500 or tax payable under sections 87A. Total income between 5 lakh and rupees 10 lakh attracts tax at the rate 20%. The highest rate is 30%, which is attracted in respect of income in excess of rupees 10 lakh. So there is also the surcharge and rebate under section 87A. So surcharge is an additional tax payable over and above the income tax. So after you have computed like on this basis of the slab rates that are the 5%, 20% and 30%, and there is a basic exemption limit of 2,50,000, but under the slab 5 lakh to 10 lakh, there is a 5 lakh of rebate that is given. So that is also applied in the computation of like tax on total income. After you have computed that, you come under after that tax, there are just certain additions like of certain at the rate rates of tax that are added to the like income tax, that are called the surcharge or the health and education cess on income tax, and they have been like computed. So surcharge is basically an additional tax payable over and above the income tax. So it is basically if your income exceeds rupees 50 lakhs, the rates of surcharge applicable for different slabs or total income are discussed. Now, rebate under section 87A, in order to provide relief to individual taxpayers who are in the 5% tax slab, section 87A provides a rebate for the tax payable by an SSE being an individual resident in India whose total income does not exceed rupees 5 lakh. The rebate shall be equal to the amount of income tax payable on the total income for any assessment year, or an amount of 12,500, whichever is less. Next is the health and education cess, which is applied after the surcharge and rebate have been calculated. So it is basically at the rate of 4% of income tax plus surcharge. Now it is the income tax. Now it is the step number 12, which is the advance tax and tax deducted at source. Although the tax liability of an SSE is determined only at the end of the year, the tax is required to be paid in advance in 4 installments on the basis of estimated income, that is on or before 15th June, 15th September, 15th December and 15th March. However, residents opting for presumptive taxation scheme can pay advance tax in 1 installment on or before 15th March instead of 4 installments. In certain cases, tax is required to be deducted as source from the income by the payer at the rates prescribed in the Income Tax Act 1961 or the Annual Finance Act. Such deduction should be made either at the time of accrual or at the time of payment as it has been given. Step number 13 is the tax payable or the tax refundable. So after adjusting the advance tax and tax deducted at source, the SSE would arrive at the amount of net tax payable or refundable. Such amount should be rounded off to the nearest multiple of rupees 10 as per section 288B. The SSE has to pay the amount of tax payable called self-assessment tax on or before the due date of filing of the return. Similarly, if any refund is due, an SSE will get the same after filing the return of income. Now, the return of income is basically like you have to file a statement of how you have calculated your income, what is your income under different heads, then you carry out your gross total income, and basically it is like a proper statement of how you have calculated your income, what is the total income and the tax payable on it. It has been like calculated basically by the portal itself. There has been an online portal for it where you can do everything online, and you basically self-assess your tax. Self-assessment, that means you self-calculate your in total income and your taxes, and you pay taxes on it. So that was a return of income. So there are some summary points that are made for you for this section of the chapter. So it starts with the example of a direct tax and the indirect tax. Then it is detailing about why the revenue has to be collected in the form of taxes. And then we have like who has the constitution given the power to basically frame the laws on who can collect the tax and on whom parties the tax can be collected. And then it is given that the matters that are given in the 7th schedule by virtue of Article 246 of the Constitution of India, the different list has been given, and there are matters under that, and exclusive powers have been given to Parliament and legislature of any state to make laws on that matter. Then we have the income tax, and it is covered under the Union list, entry 82 of Union list, and Parliament can make laws on the income tax other than agricultural income. Then we have the overview of income tax law, which is basically covering all the sections and subsection clause and subclauses, provisos, explanations, and then we have the Finance Act, and that is covering different parts and detailing about the different dates, slab rates, and various clubbing and TDS provisions have been covered under those parts. Then we have the income tax rules, then we have the circulars and notifications, then we have the case laws, which is basically the decisions given by the Supreme Court that are considered as the law of the land. Then we discussed about various steps for the levy of income tax and to the step that it has been covered under the collection of income tax, and we started with the determination of residential status of an SSC, and then we have went on to the tax payable and tax refundable amount of an SSC, and then we have talked about the return of income, which is basically the statement of how you have calculated your tax and what is your disclosure of income and what is your income covering under various what kind of heads, the slab rates that are applicable on you, your like various deductions, exemptions, and have you like TDS provisions have been applicable to you rightly, and what is the total amount of your tax, and then other the cess surcharge, and if you have any advance tax, and if you have any TDS, then you have any kind of amount that is coming under the tax payable or a tax refundable amount. So that is kind of the total like a statement. Okay, so that is the return of income, and that was all we have discussed for this section of the chapter. So that's it for this section of this chapter, and I will cover the upcoming sections in the videos for this chapter. And until then, I wish you all the best and focus on this chapter very well so that you can get your concepts very right. So until then, I wish you good luck and bye bye. I will see you in my next video.